I have opened and funded a brand new trading account with $50,000, and this year I intend to grow it to $100,000, and I'm going to do it right here with you. The reason for this is if you are new to options, chances are you're not starting out with $500,000 or $1 million. And a lot of the strategies that you see on this app need you to have a significant amount of money to get returns and results. The other reason is that if you've got a small account, you want to grow that thing as fast as possible. You want to get to a trading account size that probably is $500,000 plus without it taking 10, 20 years. So I'm going to share with you the exact trades I place in this account. I'm going to take you along for the ride. We're using options, but we won't be using sold put options because they are just far too slow if you want to be doubling an account in a short period of time. So to double your account fast, you need strategies that have larger returns. You need strategies that are low risk. So very rarely in this account will I actually be buying options. Yes, there will definitely be a time and a place, but right now with markets at all-time high, this is not the time to be buying options. We also want some really quick wins because the sooner we can get our money out of a trade and we can reinvest it, the faster our account grows. So this week I've placed some credit spreads, okay? Reason why I love credit spreads is I aim for a 10% return in under 30 days. Do the math on that. It will double your account. But we're doing this on quality companies only because otherwise we're going to lose. We're doing this on companies that have rising charts only. Otherwise we're going to lose. So we're not playing this on PayPal, on UNH, on Lululemon, on Nike. We're not playing stocks that are going down. And the other thing that we're going to do is I play off the bounce of support, not just a red day. That's a huge mistake that I see. People are like, it's a red day. Let's go and sell a put or let's go and put on a credit spread. And you're guessing where the bottom might be. And what happens when we guess where the bottom is? Majority of the time, we get smoked. So we're going to play the bounce off of support. This week, I placed 3 trades. Let me take you into my trading account. Let me take you into the charts and show you exactly what I've done. So here we are inside of my trading account. As you can see, I've got 3 open positions. So I've got a contract currently on ALAB, CRDO, and Microsoft. I don't yet have this account fully funded, so I'm in the process of moving money to get this account to $50,000 worth of my own cash in it, and then we're going to go ahead and grow it to 100. Now, I want to run you through these trades that I've got open because they're somewhat different to what you might, hear is what you should do, or, the normal. Rules and guidelines are great, but sometimes you've just got to use your own intuition, look at your own past results and develop your own style. So this is my style. Let me take you through it. Let's start with ALAB and why I chose this trade on ALAB. So it's got 27 days to expiry. What's the contract date on these? February the 6th. And when I opened this contract, I opened it for a credit of $132. So $132 is already tick in my account. And my spread is a 120 bought put and a 130 sold. So in short, what that means is that I need this stock to stay above $130 on February 6th so that I can receive my entire 132, or so that I can keep my 132. Let's come into the chart and let me show you why I placed this trade. So here we are in ALAB. Now, this is my $130 sold put level. So I need this stock, I need ALAB to stay above $130 by February 6th. Why did I choose February 6th? Because earnings is on the 10th, and I don't like to play these over earnings. To me, that's too much risk. And when we want to double an account, we don't want to take that risk. So we specifically chose to end before earnings. Now, remember I also said we don't like to just guess where the bottom is. We like to play the bounce off of support. And this is something that I've played a few times now. Look what happens when we reach this 150 moving average. We get a bounce off support. We reach it, we get a bounce off. We reach it, we get a bounce off. Now here's the really cool thing. When we're playing for the bounce off of support, we can get out of these trades before they expire. I don't have to hang out in this trade waiting for February to come along for it to expire. I've already got my sell order placed to capture 80% of the profit. And why I like to do that is because when we get these days where we wick up nicely, my contract, my sell order will be picked up and sold without me having to do anything. That's the beauty of these trades. We set it at the right level. We don't set it for a random red day because that doesn't tell us we've found the bottom. And that's, I think, where a lot of people go wrong. It's a red day, let's sell a put, let's put on a spread and let's put it at support level. Okay, great. If you did that on one of these days, you probably chose this level as support because it's, had a little bit of support there in the past, but then we keep dropping lower and then your trade's at risk the whole time. Let's take a look at the next one. CRDO, and look at this already. So CRDO, we received a credit of $106 when we opened this trade only 3 days ago. It's already at $74 in profit. So on Monday, come open, if we get just a little teeny tiny bounce, my sell order for 80% profit is likely to pick up. And then I'll get out of this trade literally in under a week. Let me show you why I chose CRDO. Let's find my levels first, actually. What did I take on CRDO? I took a 120, 110, and you can see I've already got my sell order here. My sell order is sitting there for 21 cents. So once this $1.06 that I received whittles down to just 21 cents, my sell order will be picked up and I'll exit that trade. So 120, 110 on CRDO. What did we do here? So 120 is here, expiring just January the 23rd, because that gave me my 10% level. I was happy at a 120 as my sold put. I think that we're not going to drop down below here. It's under where we've found support along here. It's under this 150-day moving average that we got the bounce off of. Just like that. So our entry day on this one was Thursday the 8th. In just one day, I would have been so close. Look how high we got up to. We got up to 156. I would have been so close to getting out of that trade at my 80% profit in just 2 days. So we'll see what Monday brings. If Monday gets up around this same level, then no doubt my exit order will be picked up and I'll be out of that trade in just a couple of days. My final trade, what have we got here? Microsoft at $4.50, $4.40. This one's expiring January the 30th. And this one's down a bit. This one's down $42. Do I care? No. Let's go and have a look at the chart though to see how this $4.50 level is currently playing out. Microsoft. So here's my $4.50 level. Okay, expires January 30. Now, I don't know what happened here. I am pretty sure, I did a video on it, so I'm going to have to go back and check the video, but I'm pretty sure that earnings for Microsoft was the first week in February, which is why I chose January 30 as my expiry date, because I typically wouldn't purposefully trade over earnings. So my plan with this is I will get out before earnings. So why here? Again, bounce off support. We bounce off support. We bounce off support. So in the next 2, 3, 4 days, week, if we can get that same bounce off support, I'll be able to exit this trade sooner. I didn't play it up here. This is the key, guys. I didn't play it on the red day at support and just cross my fingers and hope that we don't go below. That's where people get in a world of hurt with spreads. We wait to find the bottom, we wait to find the support, and then we play the bounce. So as you can see, we've come back down to retest this support level again. That's why my contract's down a bit at the moment. But as long as we stay above this 450 level, I'm good. If we don't stay above, if we start to drop below, then I can look at my rescue strategies. You don't have to take a loss on these things. If all is still going well with the company, with the market in general, you don't have to take a loss on these. And that's why I love credit spreads so much, is because there are actually so many ways that you can manage this trade to not take a loss. So they're the 3 trades that I've got on at the moment. Let me show you how they look in my tracker. So all 3 of them I've received so far: the 109, the 106, the 130. They're all a $10 wide spread. So the capital that I've got up front is just $1,000 each. That's it. So I've used $3,000 worth of my capital, tied up as security, to so far earn $347. Now, this is the cool part, guys. Let me show you this. This is how you grow your account so quickly using spreads. So my trade ROI, 10.9, 10.6, ALAB is 13.2. If I hold to expiry, look at these annualized return rates: 456, 403, 1,061% ROI. Now, we're not going to get those trades every day of the week, right? And if I exit these early, we're not going to get this full amount. But let's take a look at CRDO already. Remember, CRDO was already at $75 worth of profit. So if I close this now at my $75 profit, I drop down to a 7.5% ROI. But remember, I was in the trade for 2 days. I don't even know what that number is. A lot. But can you see the power of doing these trades quickly? Play the bounce. We get in, we get out. That's it. That's it. It doesn't need to be any more difficult than that. These are the exact trades that I'm setting up the members in my mentorship to get started with. They're starting with account sizes that they're comfortable learning on. We're going to rinse and repeat these trades over and over again, starting from this week. And they can start to see the power of using options. Start with a few contracts, start small, get the hang of it. And then also start to learn the way that we can get ourselves out of these trades if they do go against us. Because we don't have to. This is the key. If you want to take something away from this, you'll hear so many people say, you'll lose your $1,000. If you lose your $1,000, you've done it wrong. If you ever lose your full capital in an option spread, a credit spread, you've done it wrong. There's no need to. So, stick around, make sure you follow this channel. Every week I will share all of the trades I put in this account. I will share with you the winners, I will share with you the losers, I'll share with you the different strategies that I'm doing. Once I've got my full 50,000 in here, then we'll move on to some other strategies to really start growing this account nice and quickly to get us on the track to $100,000.